See, this is a good team.
Ladies and gentlemen, welcome back. Episode 45 of Chart Talk. Going through some member charts, market outlook, some social media questions, the whole shebang that we do every week. Bennett, how's the weekend? How's everything?
Doing good. It's a little chilly over here.
I see that. Fucking goose down, huh?
Got the TE Goose collabo.
Hell yeah.
Need your patches. Let us know after this. We'll get
Looking good. You're looking good.
I don't know if I'll keep this on the whole time because it's.
Nah, you shouldn't. It looks ridiculous, but.
Right, so we're gonna jump into market outlook.
Yeah, real quick. Just wanted to say, very proud of the team. We raised over $13K for Black Lives Matter movement and families of George Floyd, Ahmaud Arbery, and Breonna Taylor. So very proud of the team. Very good shit. All right, let's jump into market outlook now.
Do it.
I mean, market outlook. Right now, we're experiencing absolute FOMO rally in the markets. All the people who were waiting to get back in just had no patience of getting back in. We're seeing chasers chase and bid this market higher and higher. I mean, we're seeing exuberance over the reopening of the economy, things like that. And this stock market has just gone parabolic the last virtually 3 weeks. It's pretty market wide. You know, a couple weeks ago it was more tech names. Now we're seeing the more cyclical names. The airlines have started to come back. You know, restaurant stocks, all of that thing. So, you know, this rally. I mean, we need to slow down, but I mean, this could be the start of a continued rally in my eyes.
Yeah. Shake, if you want to pull up the first chart on the email.
Rebalance zone.
Yeah. Yeah. So if you get, like, and just what you reiterated, I kind of drew like the bigger trend line that we've been on, like sport wise, than the last 2 weeks. You mentioned how steeper it's gotten, and it just seems like for all the major markets and major sectors, it's just been a race back to the prior highs, as if nothing had happened. So for us, it's been great to just kind of sit and hold a lot of positions that we've had. And again, this is reiterating everything said. When everyone else tried to chase, we're just kind of sitting and holding what we got.
You're right. I haven't pressed the button the last 2 days. I'm just trying to sit in longs, and just try to not do too much right now. Just sit and fucking have my stops and, just try to not overthink it so that I can stay in the move. Because if I start overthinking it, start trying to get too cute and tricky with, stops and things like that, I'll probably get shaken out, and then I'll be like killing myself for not making any money when the market's going straight up. So, just trying to kind of sit long and strong right now.
Yeah, definitely agree with that one. And if you want, we'll do another quick little rebalancing lesson. I know a few of the guys kind of appreciated it last week, so we'll do a quick little 1 minute recap on that. So, Shake, if you want to pull up the next chart, that would be VCR.
What's up?
Okay. So again, we spoke last week a little about rebalancing. We'll touch upon it again. So again, the main focus is we want to be locking in profits in the winning stocks or sectors. So for this one, for VCR, it's in a new all-time high. So we're gonna be letting some off, taking some gains off in VCR, and then moving our stop up. So for VCR, for the members that are still in it, we have a stop first 205 in it, and then as we sell some in this, Shake's gonna pull VDE. This would be we're taking the funds from VCR and then we're adding to VDE. Now VDE we've been buying, pretty much all March and April up through 52 was kind of our last buy, but hopefully you get an idea of, as the sectors that are getting back to new highs, we're taking some of those off, and the ones that have kind of been behind or lagging like VDE, we're putting the money back to work there, and we're repeating that process of locking in profits and then putting them back to work in sectors that are not, as far extended as the others. So hopefully that little lesson helped. Regarding rebalancing. And Shake, we can jump into the winner for this week if you want.
Yeah.
Oh, again, now you can't see it, but everyone else can. So we're picking Bobby.
I wouldn't be so sure.
Oh, you can see this time? All right. So
no, you're frozen. I can't see anything. Hopefully the video editing team is going to
hopefully Garrett
bring us to the promised land here.
Yeah. But we went through the comments, and Bobby Moore, we're picking him. He was the one who mentioned the rebalancing lesson, so we brought it up again this week. So Bobby, if you're watching this, just shoot us a DM of your address. We'll get this mailed out. And then again, Shake, you probably can't see this, but for next week, we got this Kobe mural that we're going to give away. Again, same thing.
Wow. How do I get that? Can I get that?
I mean, drop a comment, up, share it.
We'll be all in them comments.
Yeah. All right. So with that, I think we'll jump into member ideas.
Yeah. Let's jump.
All right. We got Daniel looking at VCYT through 27. It's to buy.
Love it. Yep. It's just like this is what it's going to come down to. Every chart, it's either coming out of consolidation or they're chasing it because most charts look good right now. VCYT, I see that consolidation. Boom, the idea makes sense right now. Like in an extended market, you don't want to chase too hard. This just has to be tight, coming out of a level, things like that. So VCYT, good.
Now what about band through 115?
BAND. Not enough consolidation. We're going to let that one go because there are ones like VCYT out there. So band, I know the consolidation. We want more of it. So right now, don't need it.
Gotcha. All right, next we got Anish. More of a broader question. He goes, at this point, I'm not thinking of putting on much risk or no risk really at all, given how far the market has come in the last few weeks. He's asking, is he speculating this move, or is it okay to make these assumptions and be, kind of on the sidelines?
Well, no, I mean that's kind of what I was touching upon earlier with the market outlook. I haven't bought anything in the last 2 days, but things have looked really good. But I have a shitload of stock, I have a shitload of risk on, and I don't want to overthink the moves and get too cute and over rebalance. Where I sell too much of my winner and then try to buy the laggard and it's not working out, stuff like that. So it's like I think that's kind of the right mindset to have. But there's also, I mean, you can't deny it. There's not like so much shit moving so well right now. Yeah. So I mean, both kind of mentalities make sense to me.
Definitely agree. I think even with that, I think when we get asked that question a lot, it's usually if we dig deeper in that convo and we have people, it's like the market's too extended and they're referring to the SPY or whatever major index, and it's like, well, what other names have you looked at today? And it's like,
right,
just a SPY. It's like, well, okay, well, there's 500 other names in S&P. Look at them all, and I'd be hard pressed that you wouldn't be able to find one set up, among that big basket of stocks. So, if you keep scanning, you'll find something. He had two names he was looking at. One was his AEM, it's gold miner, through 60.
Through 60 would be too far. I think you buy it earlier than that if you're trying for the support buy. I mean, it'd be against yesterday's pivot or Friday's pivot, correct? Mm-hmm. Yeah, so I get the idea. It's a support buy, but I don't think you wait for 60 and give it $5. Yeah. I think you have to buy it pretty sooner than that. But yeah, that makes sense to me. And retesting that little support level.
And the other one was this AU, another gold name.
AU, get away from my gold. Is this ADR? It's super gappy, so yeah, I guess. From a technical perspective, I can't say this because it had such a nice resistance level at this 2350 area, and now it's just retesting that area and holding it so far. So, technically that looks fine. Mm-hmm. I'm not going to buy this.
Yeah, I was going to say, like, my 2 cents on anything gold related is if you're going to play gold, just buy the GLD. When you try to pick, like, specific names, GLD isn't going to miss earnings. It's just a huge ETF. It's just tracing the price of gold. If you're bullish on gold, it's the easiest way to play it. When you pick the individual names, gold can be doing well, but if this miner is stuck with a ton of gold they can't sell, if you think about every jewelry store in the world has not been able to bring in a customer for the last quarter, they're probably not moving a lot of gold product. So, again, you and I, we both stay away from the gold sector in general. But if you are a gold bug, it's probably easier just to buy the GLD than trying to pick a name that's going to have the risk of the company performing on top of how gold's going to move. So next we got Carl. He's looking at ABBV. ABV through 95, 96.
I like the level. I like the macro picture. I know he has such a larger time frame that it's not really like as important that it's up a bunch the last 3 days to him. Mm-hmm. So for his time frame, I think this makes a lot of sense. I don't think I would go after a name like this right now because you have to give it down to this area, and that's something I don't want to do, this 89 area. But he'll do that, so that makes sense to him. For him, I like that.
Yeah, I was gonna say the same thing. I know that bigger level, but
right.
I don't think it's gonna be going like this week. It just got to be so quick. What else looking at? It's SAIC through 92.
Damn, this thing's a fucking chop fest, huh?
Yeah. But another big level going back to 2017.
No, yeah, it's definitely a big level. I just hate how it's straight vertical into this level, like straight vertical. It's just such a hard
buy.
market goes higher, right? It's just a hard buy for me. It's literally gone straight up from 50 to 90 in the past 6 weeks. It's like, so that one's more tough to buy. So what I was talking about at the beginning, like tight coming out of a consolidation. Mm-hmm. I would pick something else. I would pick VCYT over that one because of this just massive run it's already been on. Yeah. So I'm just looking for things coming out of a tighter consolidation than this. Yeah. Nice level.
These ones were like, this reminds me of almost like a Tesla through 400. When it really went, it was so hard to buy that level, but that was unfortunately the time to buy it. So just
difficult. Yeah, I don't think SAIC, Science Application International Corp, is the same as the most talked about stock in the fucking market.
No. 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 Hell no. 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 I refuse. No. No.
okay, all right.
Just me. Yeah, that's just me. Maybe, but.
And then let's see. Next we got Vishal. He had a broader question. He says, "Do you guys wait for the moving averages, especially the 8 AMA, to catch up when buying a breakout?"
I mean, it's very circumstantial. Very. Is there a name that he
just a broad question.
Just a broad question. I mean, I like the moving averages to be tight. I know you don't use moving averages, so I guess this is more geared towards me. But I would rather, in the perfect situation, all the moving averages are super contracted. That 8-day is curling up ever so slightly, just hugging the price right now. Stock is just waiting to fucking come out of a massive consolidation. That's always what I'm looking for. But the application of these things is much more difficult than just the generalities like that.
The other name he was looking at was this Merck. This is a name that I've been in for a little bit with a couple of guys. Shakes are going. I could just go over really briefly.
Hit it.
He's looking to buy an 83. Unfortunately, we were buying 77 versus 76. We were risking $1 off of support, and then looking for this kind of downtrend break through this like 82 area. So, kind of buying 83, 84. I can see the resistance buy, but you have a much harder trade because you got to really give it versus 81 when we luckily got it up off of support. So we have much tighter risk. We don't have to be perfect through 83, 84. Where if you're buying it here, you unfortunately kind of have to be. So for me, it would be a pass, but depends on what your time frame is.
So the name you're up 10% in, you don't want to buy?
I mean, I'm not trying to buy it right there.
No, that's a nice level though.
Just buy it that day one.
That's everything right now for the most part. I mean, there's so many things that are just like extended, and that's what makes it so tough to put that risk on right now.
Yeah, definitely. Agree with that one. And then again, the other name was this DUK through 92.
Duke Energy, huh? Nah. I mean, it looks good, nice level, but you just can't be super, super late to these energy names like this.
Yeah.
So, it's kind of same thing. I noticed the level. Maybe you get some sideways or something like that. Then it becomes a different trade a bit. But just, to chase an energy name is kind of nuts.
Yeah. And I'm with you 100%. Next is Jake Lundstrom. More portfolio question. He says, for the smaller traders, guy with 5K, is it more beneficial to have, one name with the 5K in it, or to spread it around and say have 1,000 and say 5 names? Kind of,
So I mean, putting all your eggs in one basket is never a good idea, definitely. But for growth, I like to focus on concentration. Like I like to be right now. I'm in so many different stocks because of the market environment. But for like when I grow my account the best, I'm really focused on 3 or 4 stocks, let's say. So I'm a fan of concentration and growing the account in like growth names and when I'm aggressively trading. Mm-hmm. But when I'm like building an account for the longer term and kind of more slow playing it, that's when I'm using a lot more names, diversifying more a bit. Mm-hmm. So it kind of depends on his investment goals. If he has 5,000 and he's trying to trade aggressively, I would say do like 3 or 4 names. Mm-hmm. But that's kind of my mentality for anything. If you're trying to grow an account aggressively, mm-hmm. What do you think?
Yeah, I was thinking again, it's going to come down to your personal preference. If you got one name and you got 5,000 in one name, you got a monster year. The stock's up 100%. Your 5K is now 10. Now, if the stock gets destroyed, that 5 gets cut in half. Your 5K is now 2,500. So your upside is going to be your upside and downside is going to be very volatile. Whereas you stretch into more names, you get you have 10 names that are 1. You're going to get closer to average market returns. So that's where you kind of come into your own personal preference. If you're a little bit more risk on, 1, 2, 3, 4 names, as Shake said. If you're a little more conservative, you don't want to see your account jumping up and down 10, 20% in a given month, then you got to spread the money around a little bit more. Next we got Roberto looking at this GSK through 43.
See, that's nice coming out of tight consolidation right there. That's good. You like this daily consolidation? Nice little flag. Beautiful. Yeah, I like this. We're talking about, I talked to Vishal, the 8-day simple moving average. Look how tightly that's curled up, hugging the price. That is just like that. That's what you want right there. So I like that one.
Yeah, this was one we actually were buying up through 38. This is another big picture a few months back.
Hell yeah.
And then you get the next buy is through 43. Definitely
Love it.
with him on that. Next we got Will Thompson ACAD through 47. 47.
Nice. Yeah, this makes sense to me. Nice little retest. Very, very simple. Very simple. Just coming down, retesting a prior resistance level, seeing the buyers show up. Usually a nice risk reward in these trades when they work out, and that's what's been really paying us. That's what we've done really well in this rally. So yeah, that makes sense to me.
And then another one is this APEI through 34.
Ooh. What is this guy?
I knew you would like this one.
Oh my god, it does 100K a day. It's so thin. This is a sick level. This is an absolutely sick chart. So what I love about this chart, and I'll show you a chart that is very similar but very different to this in theory, where it's like this name got beaten down from 44 to 24 over the past 2 years since August 2018, whatever that is. Mm-hmm. And now it has these apparently massive earnings that causes the stock to rip out of this downtrend and up towards this 34 area. And then for weeks, it just goes sideways. So type up ABMD. You see this ABMD? Mm-hmm. Name got beaten up for 2 fucking years. Then they have these earnings May 1st, seemingly huge because it breaks them out of the downtrend. Then it flags sideways and then gives you the entry through 200. And that's the trade right there. So that trade is just working so well in this environment. So what was the ticker of the one you just said? Sorry.
It was APEI.
So theoretically, that's the same exact setup, and we just saw that ABMD go for like 40% in like a few weeks span. Mm-hmm. So I love these change of composure setups like this, but I wouldn't be able to actively trade this too heavy and get a 10K position if it has 100,000 shares being traded every day. So it's like sadly that becomes an avoid.
Yeah. The name you just called out, did you call that one out? Because one of the members in Good Trade is actually in it from that exact price. So
yeah, boy, I call that shit out.
Man, I'm glad I called that guy.
Give me the layups. All right, next we got Alex Smith. Look at this Beam. BEAM through 28.29.
This is like a pure momentum play, so it's different. It's not as like technical. It's like more volume related and just price action. So it looks okay. Obviously, I'd like it for it to be tighter and the price to be more contracted within the flag. Mm-hmm. See how the bottom of the flag is 22.50, the top of the flag is 29, which is like 40%, 30% move for the stock. So if it can tighten up, then yeah. But otherwise, if you want to trade this, you just have to trade it on pure momentum, and it kind of has to go that day. Not a stock you like sit in, really. But I think he's a little bit late to it, but I still see it does have upside. Okay. So I don't know. I gave him just a big nothing answer there.
All right, let's see. Let's try this KRTX through 100.
Jesus.
I know this is like a nutty chart.
Yeah. I tend to avoid these charts because I don't know what the hell that news was, and now it doesn't want to trade like that. So I avoid these charts technically, personally, but it looks okay through 100. Nothing amazing.
Mm-hmm. Next we got Khan. He's looking at this MTC.
Here's what I hate about okay. Let me get a little more specific about these charts.
Yeah.
So it does this fucking move from 40 to 140, 160, whatever that is, and then if you get that out of the way, the stock is just bouncing around. Like here it made a rule, and in the beginning of the year, it made a move from 70 to 110. Then it floats down to 60. Now it's just kind of grinding up towards 100 again. It's like it just stays in these wide ranges, and it's like because it made such a big move from 40 to 160, all the prices in between don't matter as much. Mm-hmm. Does that make sense? Where it's like this thing is just trading in a 60% range, 60 to 100. So I just don't care for names like that.
Yeah,
and that's.
And I'm even like trying to look through the news like on this name, and the only thing I could find is just like insider, insider
buying and selling.
Yeah, so it's like if that's the only news.
Oh my god.
It's it's not worth the time.
Yeah.
And then we got Khan. He's looking at this Mitch Match Group guy who owns Tinder through 95, 96.
This one looks like it's falling down. This one needs more. This one needs more consolidation. We need the moving averages to catch up. Price action needs to get tighter. Looks like it's going to fail this level. It's going to be, give us either some sideways or downward action. So, in a few weeks we'll check in on this guy again.
Yeah. Con, we were buying this through 68 like months ago. But yeah.
Right. Yeah.
Yeah, but yeah. Okay. We'll jump into a few social media questions. We have at @whore_hey. Shake, I'll take this question. He goes, I want to open up a custodial account for my 18-month-old. What should I do? The easiest route, you can open a custodial account, but probably the two better routes, depending on your stance on college. If you're not as pro-college, you'd open up what's called a UTMA account. Shake, you open up one for your grandson. This is an account where
that'd be a nephew.
Family tree stuff I always mess up. Okay, so hey, you open up a UTMA. That's an account you can fund, and it doesn't have to be specifically geared towards college spending. If you put $1,000 in every year, $2,000 every year, however much you put in. He turns 18. He's got $100K. And he wants to start a business. He wants to buy a Ferrari. He wants to buy a new home. He can use the money for that. If you open up a 529, it's going to be taxed a little bit differently, but that will be only for education spending. So if you are going to open an account, for your son, probably the UTMA or 529 will probably have a better benefit than just opening him up a regular custodial account that is just going to get taxed, at a regular rate. So hopefully that helped you. And again, if you have more questions, we can dive into it deeper, but I don't want to spend 10 minutes breaking the difference, tax benefits between the two. Shake, we'll get back into you now. Curly Head Cole is looking at INTU through 295.
Yeah, this is beautiful. This is absolutely beautiful. Tight consolidation near a level. Yeah, that looks just like that Microsoft. We'll talk about that later. But yeah, same thing where it's like that one has the tight daily consolidation that we need to enter stock. The last 2 days have been strong, but it's still within the range of its past 2 weeks. So that one makes a lot of sense to me.
All right. Next we got Samer_AS looking at Verizon.
BZ, what up? Yeah, I just don't actively trade this name. You know how Kramer always says like own Apple, don't trade Apple. Like that's kind of my take on this stock. Mm-hmm. It just bounces around between this huge range. I don't know. It's a tough name to trade. I don't really like it as a trading stock.
Yeah, like we've been buying American Express in the same credit card processing space, but that's a name where we were buying it sub 92 in the 80s, and not really looking to buy it up here as it gets back up near highs, and same with Verizon. Or Visa, I'm sorry. It's tough to be buying it up here at 200. Boy, and it was 50% lower a month or two ago. Next, last up for social media, we have Jay Lampier. He's looking at Oracle.
Oracle was like the stock of the day today. I was between this and AMD to make it trade of the week. I picked wrong. I picked AMD. It wasn't strong today. But this Oracle is that's beautiful consolidation, beautiful flag. Turns this prior resistance area to support. Tight moving averages comes out. Nothing bad about this. The only thing is they got earnings coming up June 16th, so be careful on that one. But looks good. I know like a ton of our guys are in this one.
Yeah, your boy included.
Hell yeah.
All right. So wraps up the social media questions. We'll jump into some of the good trade, bad trade. We'll start with members. So Shig, if you want to pull up that email, we can start with Alec. So he was buying it up through 40. Along with myself, he's still in it. He's up about 60%. So this is again,
let's go.
Great trade. This is a sector, so it's pretty nutty to think that you're up, in 2-3 months, 60% in a broad sector. But again, this was one of the most beat up sectors, on the board. And if he can keep holding this until we get back to the rebalance zone, it'll be 100% trade for him. So he's got to sit patient with that. Next, we'll bring up Vincent. Shake, I believe you were in this trade. If you want to go over it, the ZM.
The ZM through 176. I don't think I was at this point.
No. All right. Well,
No. But I know the trade. Just taking out highs, momentum name. This was before they reported earnings. They probably had the best earnings I've ever seen. Literally, they were called the best enterprise software earnings ever by Goldman Sachs. They had these huge expectations. Like numbers that they shouldn't have even hit, and they ended up doubling those numbers. Very impressive out of this company. This company is going to stick around for a little bit. I don't think it's just going to be a Corona play. But here's the trade. He bought this through this momentum level, 176. He kicked into 220, and then he got stopped out when it had this inside day here and took out the lows. Yeah, nice little trade. I think he held that into earnings. Kind of nuts, but good trade. Made money. Can't be mad.
Yeah. Next, we got Mustafa in the Starbucks. SBUX.
I'm in the Starbucks. So yeah, he's just sitting in this one. Kind of bought this 80 right here. Just looks good. Grinding up with the market. So this is an ongoing trade, and he's got to break even stop now. Can't lose money. Can't be mad at that.
Yeah. Next we got Fabio in P-Car.
Pika. Oh, gave us a little picture, huh?
Yeah, he drew it out.
Okay, I could see this one. All right, nice. This is a nice trade. So he bought.
He bought up
Right.
through 73. He added through 74. Current stop is 72 half, and he took some off. That first little circle, he took like a third off.
Right. So the stock broke out the week prior, came down, retested that resistance area, held it as new support. He was buying off that new support, and now he's kicking into this extension that we're seeing, and he wants to hold some stock. He's got some good stock on his hands. This is a nice trade.
Yeah. Next we got Daniel and his Tesla.
Tesla. I'm so mad at Tesla. Oh my god. I got shaken out at 800 May 27th. Tesla. Current price 949. 2 weeks later. What's his trade?
He bought through 860. His original stop was verse 815, and then as it started to break out of that little mini flag, he moved his stop up to break even.
That's sick. Yeah. I mean, this is just a momentum stock. Once this name gets going, it's like, look out. So, he played it right. Oh, he bought that 860. Wow. So, all right. So this is Monday he bought, where it was like I got shaken out that week prior, and I was like, man, I don't want to buy this. It was gapping up like $30 at that point. I know it doesn't look like much on a chart. And he bought that gap. That's impressive.
Yeah.
And then sold him straight today.
I'm pretty sure he had a 840 buy stop, and then it just triggered off the open, and that's pretty much how he got filled.
Yeah, that's maybe something we got to work on there. But glad he made money.
When you're lucky, sometimes it works out.
Hey, buy stop limits off the open. Buy stop limits so that if it gaps up like crazy, $30, they're not all going to work out like this. Do a buy stop limit 840 to 845.
Okay, so that's actually a really good topic. Really quick, we get asked about stops. So there's two major stops. There's, buy stop and then a buy stop limit. Like what Sheikh just mentioned, when this name was gapping up huge, again, it worked this time. But if it just gapped up 30 points in reverse, Mustafa would not have been as happy about this trade. So
right.
In much more volatile names, especially around earnings season, like if there's a level lining up during earnings that setting up through 100, but you don't want to get marketed in at 120. Those are times where you put a buy stop limit in. You're willing to pay up, say $1. You put that in. If the stock gaps up 20 points or 30 points off earnings, your order doesn't get triggered. You missed the trade. That's fine. But those are times, especially very volatile, momentum names. Those when buy stop limits can be beneficial. Now on the flip side, when it comes to sell stops, just use sell stops. Do not try to time your being wrong and getting out at a certain price. I can't think of one time I've ever wanted to use a stop limit order to get out of a trade.
No, never.
Yeah, so on the way up, buy stop or buy stop limit. On the way down, just sell stop. Keep it simple. Next, we got Roberto and his QCOM, and he had a big thanks to you, Sheikh, because
What'd he say? What'd you say? He had a what?
He had a big thank you for you for.
Let's
you
go.
called this one out through. Was it through 80?
Yeah. Well, no. This one was funny because we were filming Chart Talk last week, and we did it during market hours, trying to get like a jump start on it. And I was like, we gotta hang this shit up. Like, I gotta buy this QCOM 81, and look at it, 5 days, it's gone straight up. I'm in this one with him. This one I'm just like sitting, holding, not trying to do too much, just trailing it. Right now, it's trading at $91, and the 8-day simple moving average is at $84. That tells us it needs sideways badly. But so right now I'm trimming into strength, but I'm also holding on to a core position with a decently wide stop so that I can have the best of both worlds. I could be in it for the longer term, but I can also book gains right now. So yeah, this QCOM is awesome.
So now for Roberto, he's got to stop for some verse like at 83 half, and then he has some verse at 87 half. These two last little spots. Is that
Yeah, both make sense. Okay. Yeah, absolutely.
All right. Next we got Adam Chatty. This TER.
Which one?
TER.
Pterodine, huh? What do you? I forgot.
Yeah. So I'll recap this. And this is one he bought. We went over this last week. He bought up through 67. We were telling him how we want him to hold for that retest of 81, which you can't really see.
Oh wow. Yeah. I remember this now.
Yeah. So again,
you were like, it'd be a man's trade if you held it to 81, and then like 3 days later, it's like tickling 80.
Yeah. So again, he took some off in the strength, a little bit ahead of it, got stopped out of some. I know he's holding some back to break even. Hopefully, he gets that sell in those 80s for that retest.
Yeah.
So we'll follow this up next week and see where he's at. Next, we got Will Thompson and his ABMD. This was your call, Jake.
Oh, there you go.
So
Right. So, I mean, we saw the setup there. Change of composure earnings. He bought through that 200 we were talking about before. Hell yeah. And this thing was so beautiful. I was so mad I missed this one. It was like, I didn't really want to highlight it because there's so many good, like really good looking charts out there. And this is a name that, just went 440 to like down to 160. So I didn't really want to highlight it too much. But I like threw it on the shakedown and threw it on the alerts. And there you go. And look what happens. It was the best trade we saw in the last few weeks.
So this is
yeah, go on.
I'm going to cut you off. This is another example going back to what was it, Alex Smith asked about the smaller accounts. You could see in this trade he's only got he's got what has he got, 30 shares,
10, 13 shares, yeah.
So he's got 10 shares left. So this is like
13, 20, 25 shares.
So he's got 10 shares left now. He's got $2,000 in the name, but he's made over $500 in this name. Now, if he only bought one share of this, he'd been up $40 since he put more of his account. If we're saying it's a smaller account, he made $500 so far in this name. So this is kind of a good example of that $5,000 account. If you put in half, that's how much you would have made if you bought a few shares. You wouldn't have made so much from a 25% winner. So hopefully this is like a little bit more of a relevant example. Next we got Jake Fox looking at McDonald's. Oh no, sorry, his trade at McDonald's. If you got that chart pulled up, Shake, I can go over really quick.
Yeah, go on.
So he was looking at this 190 level. We were telling him in some previous chart talks back in the end of April. Let's kind of wait for that to get back through 190 to buy it. At that point, he got in a little bit early with a feeler through 185, added through 190 as it broke out. Now, the main thing that I want to highlight from this, and my main mistake that we'll go over later, is his target is that retest of 220 in McDonald's, which is, most likely we'll get there very soon. But the fact that it's the third major time it's getting up there, and after this dirty shakeout, my 2 cents, and Jake, if you just really let me know, is once it gets back up to 220, it'll probably flag and then set up for that next leg through 220. So since he already has this great stock down here, I'd be much more patient up through 220 and try to wait for that next leg up to new highs versus trying to sell into it. And that's going to be one of the main lessons from my BA trade that I messed up. So hopefully, Jake, you learn a little bit from that. And Jake, if you disagree,
It's still got 10% to go. Let's not get ahead of ourselves here.
I'm just saying, like, for that chart pattern, like, once it does get back up there.
No, I get you. Yeah. When it gets up to that third time, theoretically it should,
Yeah, we'd want to buy 220. So it's like, if you already got good stock, try to sit with it.
Right.
Alex Smith, we got this Alec for bad trade. You got that chart pulled up.
Oh, okay. I see what he did here. That's tough. So he was buying this little mini consolidation right here. All right, so this name is a very explosive name, this Alec, A-L-E-C, biotech name. So what he did is had this tiny little mini consolidation area, and he was just playing for the momentum aspect, and where this name kind of had to go right away or he was going to take the loss, and he took that loss pretty quickly. I mean, this kind of trade is kind of why we're highlighting support buys so much, because we kind of got sick of hearing people just trying to play the momentum sexy trades all the time, when it's like now, like this Alec looks really good for a support buy, through today's high at 31.50. So I see the where he made his mistake, but I mean, a lot of these trades have also been working out. So take the good with the bad.
This XP, this is probably one of my most favorite good trade batches that I've seen so far. If you want to pull that one up, Jake?
It's up.
All right, so he was buying through, again, textbook breakout through 28, waited for that third time, for that breakout up through it, and all he did is he's just been moving his stop up. He's just been trying by the low a day. He has his old into strength. He's just been sitting, just moving up every single day, and today alone, it's up 12%. So this is like a textbook, this is the main lesson for me that I've been learning, where, especially in this market where everything's just kind of getting a little bit more parabolic and a little bit more euphoric, where it's hard to, yesterday he would not have thought this name's going to be up another 12% today. But it didn't, and that just is what it is. But he's been able to milk this trade for, every ounce of what it's got. And I think this is one of the best trades I've seen in this recap so far. Let's see, next we got Ryan Nash, and he has this in PGNY.
Oh, he got stopped today? Damn.
Yeah.
I'm in this one with them. This name is giving us such a fucking headache. And this buyer, probably the most annoying buyer I've ever seen. This guy, so a lot of times when we see buyers working their orders on the tape, what they do is they buy small amounts slowly throughout the day. What this guy does is he fucking Doesn't care. He just buys 25, 25, 10, loads up all his shit. He bought 250K off the open this morning, and then we didn't see him the rest of the day. So usually when we see a name like starting to ramp up in volume towards a resistance level, that's usually when we see the momentum start to kick in and more buyers beget buyers, and then like it starts to break out. But the buyer in this name has been so tricky where he comes and he goes as he pleases. You know, maybe we'll talk about him in a week that he finally came above 25 and continued to move higher. But it seems like he just doesn't work his order in full right now. But right now, I mean, this one, he wanted to keep it tight. He probably wanted to get a little bit extra stock and keep it against 24. And very simply, this support level is 23.50, and he just got shaken out. So it's kind of tough situation. But I bet you he won't cheapen out that 50 cents next time.
Next we got ABC. He's also. I've been in this as well.
Oh, dude, this is my biggest hold in my long-term account. I love this stock.
Yeah, so I guess we're all in this name.
Hell yeah. I know these good ones I don't want to talk about because then they're going to fucking fail.
All right, so
That's how it goes.
I'll do it really quick. So again, he bought up 384. Again, this is sport buyback. We've been kind of hammering this down the last month or so. That's been our big focus. Bought up
He's been
384,
killing it.
and he's just been trailing his stop. His stop's right now 85. I think Joe Park has some verse 98. I have some verse 94. So again, everyone has different stops. They trail them how they want to trail them, but we're just letting the stock kind of work its way higher.
Right.
And Shake, don't even mention your stop because we don't want to jinx it.
Shh, don't even talk about it. Don't even talk about it.
All right, next, going off Joe Park, he's also in this MU, which Shake, you definitely, you bought this one mid chart talk last week, so I want to talk about it.
Yeah. I mean, very simple trade. I did a little video on this one. I think we got coming out tomorrow actually, but very simple trade. I can explain it right here real quick. Kind of ruined my video that's coming out. So we see these battlers, these guys battling at support in this MU. The buyers are coming in, And here's a very important day, this May 27th, that big green day where it came down, it opened up, came down and tested that support level, and then buyers ripped it back up. Then over the next 4 days, controlled pullback, and on that fourth day, we saw the buyers come back at that supporting that area again. So we bought some that day, and then we just kind of kick in a strength, and we're riding out our name. And this is just, you can't ask for a better trade than that. Yep, bought that with us. Boom, trailing it below today's low. I like it. I've kicked a bunch into this 54, and I'm gonna keep some wider because most likely it does have to come back and retest this 50 area. It's just up a bit much, but I'm with you. It was a good trade.
Next, we got this INSM by Dr. Moore. This has been his best trade so far with us.
All right. Okay. Oh, is he?
He's out of it by now.
Okay, I got it.
I can go over real quick. So I was talking about it. He was buying up through 20, kicking into strength, and then finally that fourth little red circle. That's when he got stopped out. Again, the name is still kind of working in his favor, but that's stock's going to continue to trade it to get out of them. But he did it's a $20 stock that he rode up to 24. His last stop out 20% gains. You can't really complain there.
Nope.
All around great trade. Next, Shake, if you want to jump into any of your trades, and then I'll go over a few of mine real quick.
I don't have much to go over. I think they're pretty much all touched upon here. So if you want to just jump into yours.
All right. So if you want to pull up that after under Dr. Moore, you want to pull up that first BA chart.
Yeah.
All right. So again, after names you get out of them, it always looks so easy. But when you're in them and you sell them, that day, there seems to always be a reason why it can't go higher. So for me, in this Boeing, I was buying up through 120, buying up to 140, and it had this crazy 3-4 day move from 140 up to 180. And this is Jake Rose about like for Jake looking to sell McDonald's at 220. It reminded me of me selling Boeing at 190, where I'm like it got up here almost 100% in 2 weeks. Like it can't go higher. Like I'm gonna sell it here. This is gonna be the best sell. It's gonna pull back to 140. I'm gonna get right back in. And in the moment, it seemed right. And then if you pull up the next day or the next BA chart, you'll see what actually happened, and it's still even higher. So these are those examples where in the moment, when BA is at 185, 190, it seems like a slam dunk of a sell. And then the next day it trades even higher, and then the next day it goes even higher. And I just continue to feel dumber and dumber as the days progress. As his name goes up like 20%, another 30%, keeps going higher. But that's a part of trading, and this is a good example for me, where had I not tried to sell into that 190, had I just kept a simple low-a-day stop, and I continue to trail it these following 2 days, I still would be in this name, 50 points higher than where I was selling, on Thursday. So this was one of, on Thursday it was a great trade, and now today I'm like, this is a horrible trade, even though I made money in it.
It's so funny.
And then on the flip side, Mufasa, we mentioned him before, he did the same trade as me. We both bought it through 140, and he did the simple thing. He just trailed it versus the low a day, and now he's in 90 points higher. So he murdered the trade where, I didn't trade it as well. So that was my main lesson. Hopefully Jake Fox can take that into McDonald's, and he'll make even more in it, and it'll all be worth my stupid mistake. And then the other one was this Oxy. This is a good trade. Me and Django were in this. We both bought up through 15 again. I hate buying these cheaper names. That's why I really don't try to bring them up too often, but me and Django were talking about it. You can see the resistance level. Just simply, buy stop. Risk was like $1 in it, and now it's just going into that gap fill, into that 26 area, and it's up almost 60% in 3 days. But again, this is not a trade I'm taking every single day. I'm not really looking at these cheaper names, but we've just saw over and over these beaten up charts and this pattern setting up where I kind of had to take it. So those are my.
I think all these we've seen all these crazy names go in the past 2 days, and it was related to that jobs number being better than expected, and so the economy is going to reopen much sooner than everyone expected. So all these cyclical stocks in the last 2 days, the Boeings, the Occidentals, and things like that, are just going absolutely crazy. So I don't think that. Yeah, I think it's more of a circumstantial thing. You know what I'm saying?
Yeah, definitely. Yeah, and I think a little bit of luck, good and bad. The news came, like for me selling Boeing before a lot of the news came out, bad, and then for Oxy still being in it, getting some of the benefits. So, yeah, perfect example of just how trading is.
Okay.
With that, we jump into top idea of the week.
I wanted to jump into a few charts we had today so we're talking about how difficult it is to buy in this environment. I wanted to point out a few charts that worked really well that we had on the newsletter and stuff like that. I'm just going to go through real quick because a lot of names have gone already. So like Roku today, it filled that gap Friday, and it reversed higher, support buy. This is something we bought that today. I didn't buy it. I know a lot of guys did. Very similar. SLAB, nice tight pattern, working very well. Coming out of a nice pattern. What else? What was this? Silk tight consolidation through 40. Very easy trade, starting to break out. And then this Abbott, same thing, where it's like came down, tested the support area, retested it. Looks great. Looks great to move higher. And then there's also, so now we're going to see if this market wants to continue higher, can it push the momentum names higher? Right now, that's Microsoft. Can it push this Google higher? Tight consolidation. And the NASDAQ is now closing at new all-time highs every single day. So that's something I'm looking for. There's just so much shit out there right now. AMD is still in a tight pattern. This AMED is looking like a great support buy, like the Abbotts that I was just talking about. So there's a lot out there right now. I got to refine this list a little bit. What are you looking at?
I think the one that was your trade of the week as well as mine was this BIIB through 310. Biogen.
Yep. Biotechs were a bit weaker today, but that one could be good there. I just typed in Netflix too. That looks amazing.
Yeah, it does.
See?
All right. Yeah.
Netflix.
All right. So I think we jump into book of the week.
Yeah, let's jump in. Book of the week. Pentagram. What you got?
What I got? All right. I got 5 a.m. 5 a.m. Club.
5 a.m. Club.
Yeah, I actually just started it, but I'm only like a few chapters in, but there was like 1 or 2 very good lines. So there's one where it goes, you need to remember that your excuses are seducers, your fears are liars, and your doubts are thieves. Which is a good line. And the one that's very relevant to trading.
Your doubts are thieves from your experience, huh?
Yeah. And then let's see, the last one. The other good line that it had, heart is good, real greatness and realization of your inherent genius is meant to be a difficult sport. Only those devout enough to go to the fiery edge of their highest limits will expand them. And it's the same reason we see with trading when some people fail. It's they want it to be easy, and unfortunately, not. But
right.
I only just started this, so I don't really know much about this book, other than obviously waking up early is probably their main point. But it has some very good, kind of stoic lines so far.
Oh, 5 a.m. Club, like waking up early. I didn't think it was that at all.
Yeah.
I was like, okay, go off.
What about you? What are you reading?
This is an older one. Raving Fans. It's like quick 80, 90-page book. Revolutionary approach to customer service. Just anyone who has a business. I know it's so relevant to anyone in our community. Just being so customer-centric and just kind of has specific ways and tactics you could kind of make your core fans and audience even more raving fans about you, if you will. So just anyone who has a business, it's just useful.
There's one of the chapters in Raven Fans, it's a manager of like a Macy's, like a department store.
Yeah, the desk.
Usually like the managers are like behind, you can't find them, you can't see them, and this particular manager, he has his office like directly in the middle of the floor.
Yeah.
There's no doors, you can just walk up to him and talk to him anytime. And that was like one of his, just making the customer experience like that much easier and that much more fluid. But yeah, that was a great book. Great
Right.
book.
Oh yeah. All right, wrap it up.
Wrapped it up. All right, guys. Until next week. Good luck.
Peace.
See, this is a good team.